Performance Outcome Area 6. Hello, my name's John Middleton, and let me welcome you to Module 8 and POA 6, which deals with the fourth and final key obligation of taxpayers, that of accurate reporting in tax declarations or returns. You recall that we covered the other three main obligations of taxpayers in earlier modules. We started with registration in the tax system. That was POA 1. We went on to cover timely filing of declarations, POA 4, and then talked about timely payment of taxes, POA 5. After this module, you'll have a good understanding of all of the important features of POA 6. You'll be able to evaluate objectively how effective a country's tax administration is in ensuring that taxpayers report complete and accurate information in their tax declarations. You will have been exposed to good practices adopted by leading tax administrations around the world in this performance area. You will know what indicators and dimensions are used to measure POA 6. You will have a good understanding of the scoring criteria to be applied in making your TADAT assessment in respect of each dimension and indicator. Finally, you'll know what kind of evidence you should gather and what questions you should ask in the course of your assessment work. So let's start by looking at the desired outcome for this POA. I will also cover some background on this area. Simply stated, the desired outcome for POA 6 is that taxpayers report complete and accurate information in their tax declarations. In this regard, tax systems rely heavily on taxpayers filing complete and accurate declarations. Additionally, tax administrations need to regularly monitor potential revenue losses from evasion, avoidance, and other instances of inaccurate reporting. For non-business taxpayers, mainly individuals, tax withheld at source and the systematic use of third-party information to verify income ensures a high level of compliance. For business taxpayers, however, who are generally not subject to withholding instruments, the tax administration needs to take a range of actions to support compliance. These include verification activity, which can involve things such as audits, in-depth investigations, cross-matching of third-party information, and other approaches. The tax administration should also use proactive initiatives. These discretionary initiatives, such as the issue of rulings on interpretations of the law and adopting cooperative compliance approaches, which we'll discuss in a little more detail later on. What then are the good international practices that facilitate complete and accurate reporting by taxpayers? Let's discuss good practice in ensuring accuracy of reporting in the following slide. The first good practice is having a well-designed and managed tax audit program that aims to improve taxpayer reporting across the board. The objectives of an audit program are twofold. First, the audit program should be corrective, meaning that it is there to correct discrepancies in tax declarations and to get the taxpayer back on the right track. Second, the audit program is in place to provide a deterrent to filing inaccurate declarations across the general community. In other words, if taxpayers perceive the likelihood of detection and are aware of the consequences, they're more likely to file accurate declarations. Also important is a well-functioning taxpayer assistance program. I won't go into that in detail here because we've already covered that in POA 3. Another important thing is pursuing high compliance risk cases effectively. You will recall that in POA 2, we looked at the whole issue of risk management and the need for administrations to target high-risk cases. And of course, the imposition of appropriate penalties and fines in a consistent manner is important in rectifying non-compliance and in creating that deterrent across the tax-paying community regarding the need for accuracy in reporting. Intelligence gathering too, concerning emerging risks, is a good practice. Throughout the field guide in the POAs, we continue to see the importance of intelligence gathering by tax administrations. Taking centre stage in tax administration, good practice is systematic cross-checking of third-party information. the building of capacity and systematic cross-checking of third-party information from banks, government agencies and others against the amounts reported in tax declarations is a fast-growing trend. Because of the high costs and the relative low coverage rates of traditional audit methods, large-scale automated data matching is increasingly vital in the verification process. Rulings, of course, are important, and the issuing of binding rulings, both public and private rulings, is a key practice being adopted by modern tax administrations. Those rulings provide taxpayers with certainty as to how the tax administration will apply the tax laws to particular situations. A relative newcomer to the scene is what we refer to as cooperative compliance approaches to address risks of inaccurate reporting. They involve building collaborative and trust-based relationships with taxpayers, especially large enterprises and their tax advisors, the so-called tax intermediaries, to resolve tax issues before tax declarations are filed. And finally, it's good practice to monitor the level of inaccurate reporting through various analytical methods, such as tax gap estimating. Now that we know what the good practices are, let's look at the indicators and dimensions that are used to measure a tax administration's performance with regard to POA 6. There are 4 high-level indicators, encompassing 7 measurement dimensions for this POA. Let's discuss this in the following slides. The first indicator, P619, examines the scope of verification activity to detect and deter inaccurate reporting and has 4 dimensions. The first of these focuses on the tax administration's audit programme. The second focuses on the extent to which the audit programme is systemised around uniform practices. The third looks at monitoring the quality of taxpayer audits. And the fourth looks at monitoring the effectiveness of the taxpayer audit function. You will see here that this multidimensional indicator is scored using method M1. The second indicator, P620, looks at the extent to which the administration uses large-scale automated data matching to verify amounts reported in tax declarations. We'll come back to this point a little later on. The third indicator, P621, looks at the extent of proactive approaches adopted by the tax administration to encourage accurate reporting and has only 1 measurement dimension. It looks at the nature and scope of proactive initiatives, including cooperative compliance arrangements used to encourage taxpayers to file complete and accurate declarations. And as with the third indicator, the fourth indicator, P622, also has only 1 dimension. This indicator seeks to measure the soundness of the methods used by the tax administration in monitoring the extent of inaccurate reporting. Now that you have an understanding of the dimensions and indicators for POA 6, let's get down to the business of scoring. First, let's look at P619. Remember, this indicator has 4 dimensions. As mentioned earlier, this indicator uses the M1 scoring method, which means that the overall score of the indicator will be based on the weakest link, that is, the lowest score of the 4 dimensions. Let's start with the scoring criteria for the first dimension, P619-1, which is about the nature and scope of the tax audit programme. A tax administration will get an A-level score if, in respect of its audit programme, the following good practices exist. An A-level audit programme would cover all core taxes, in other words, CIT, PIT, VAT, PAYE amounts withheld by employers and domestic excise tax. All are core taxes. The audit programme would cover key taxpayer segments weighted towards large taxpayers and high-risk segments and economic sectors. This programme would include, of course, high-wealth individuals and sectors such as the construction industry. And the audit programme would select audit cases centrally on the basis of assessed risks. The audit programme also would use a range of audit types and methodologies. In terms of audit types, it would include, for example, comprehensive audits, which cover multiple years and multiple taxes. It would consist of single-issue audits, books and records inspections, in-depth investigations into suspected tax fraud, and so on. So a range of audit types and methodologies, both indirect and direct methods of audit, would be used in the evaluation. And the audit programme, as a matter of routine practice, would evaluate the effects of audits on levels of taxpayer compliance across the broader taxpayer community. A B-level audit programme has three features identical to an A-level audit programme. To begin with, it covers all core taxes. It also selects audit cases centrally, based on identified risks. And just like an A-level programme, it uses a range of audit types and methodologies. A B-level programme differs from an A programme in two ways. A, the routine evaluation of the effect of audits on broader levels of taxpayer compliance would not be fulfilled. And B, weighting would be towards large taxpayers and less so on the other high-risk sectors and segments. And finally, a C-level audit programme is one that would cover all core taxes and select cases on the basis of assessed risks, but in a decentralised manner. The audit programme would also use a range of audit types. Let's move on to the second dimension, P619.2, which is about the extent to which the audit programme is systematised around uniform practices. A tax administration will get an A-level score if the following good practices exist. Auditors use an up-to-date manual that includes, as a minimum, guidance about A, preparing an audit case plan, B, creating a taxpayer profile, C, advising the taxpayer as to the nature and scope of the audit, D, examining records of taxpayers and determining any changes to the scope or periods covered by the audit, E, advising taxpayers of the audit findings and any resulting additional tax and penalties, F, informing taxpayers about dispute resolution rights and procedures, G, managing audit files, H, using templates for working papers, notices to taxpayers and other required documentation, and finally I, adhering to procedures and criteria that need to be applied in settlement of audit cases. Special audit manuals will exist, reflecting procedures and compliance risks specific to each of three major economic sectors or industries. For a B-level score, everything in level A remains, except that the special audit manual exists reflecting procedures and compliance risks specific to at least one major economic sector or industry. For a C-level score, everything in level B remains the same, except that there are no special audit manuals reflecting procedures and compliance risks specific to any major economic sectors or industries. Let's now turn to the scoring criteria for the third dimension, P619.3, which is about the degree to which the quality of taxpayer audits is monitored. A tax administration will get an A-level score if the following good practices exist. A unit or officially designated committee comprising expert staff members from within the tax administration monitors audit quality and adherence to documented audit procedures, and it ensures that findings are acted upon. The unit or committee uses documented procedures, including a checklist to review audit quality. The unit or committee regularly issues reports that are taken into account to improve the quality of the audit programme. For a B-level score, the requirements remain the same, except that the unit or committee isn't required to issue reports regularly. For a C-level score, the requirements are the same as B, except that the audit managers or supervisors monitor audit quality and adherence to documented procedures, and they ensure that findings are acted upon. Let's move on to the scoring criteria for the fourth dimension, P619.4, about the degree to which the tax administration monitors the effectiveness of the taxpayer audit function. A tax administration will get an A-level score on P619.4 if the following good practices exist. Senior management every quarter monitors the key performance measures in the audit plan. This includes audit outputs, assessments versus collections, inputs and time usage for each type of audit, the percentage of audit closures where additional tax is payable, the percentage of audit closures without adjustments, the percentage of audit closures resulting in a reduced assessment, average and/or median audit yield from settled audit cases, includes positive, nil and reduced assessment cases, and the average elapsed time of cases where no additional tax is charged. Senior management monitors the rate of audit adjustments accepted without objection or appeal. It actively assesses the effectiveness through narrative and quantitative analysis of the taxpayer audit function on compliance trends and the anomalies revealed through audit results, and also the time taken to complete audits. And senior management acts on performance reports to improve future audit results, track audit closures against the audit plan, and track the value of adjustments according to audit type. That's desk audit, issue, comprehensive, and so on. Also, the tax administration routinely surveys audited taxpayers to review the professionalism and competence in the performance of audits. For a B-level score, all the requirements in A remain the same, except senior management's requirement to monitor audit adjustments, assess the effectiveness of the audit function, and act on performance reports is undertaken twice a year instead of quarterly. For a C-level score, all the requirements in A remain the same, with two exceptions. Monitoring key performance measures in the audit plan is undertaken twice a year, and monitoring audit adjustments and the assessment of the effectiveness of the audit function, along with action on performance on audit reports, is undertaken only once a year. Now that we've seen how the first indicator is scored, let's look at how we scored P620 on the extent of large-scale automatic cross-checking of information. Again, since the score of A represents international good practice, a country's tax administration will get an A-level score if all the following criteria are met. We should see automated cross-checking of business income tax returns with information reported in VAT declarations. We should see automated cross-checking of amounts in declarations of applicable core taxes with information from banks and financial institutions. We should see information cross-checking with information from employers. Importantly, we would see automated cross-checking with information from 3 or more government agencies. Many arms of government can provide information to tax administrations, such as Customs, the Public Procurement Agency, the Registrar of Companies, and the Registrar of Property. Also, the Anti-Money Laundering Agency would typically provide information to the tax administration. We would be looking for 3 or more of these agencies to provide information in order to score an A. There would also be automated cross-checking with stock exchange and shareholder registries. The Social Security Agency would provide information for data matching purposes concerning payments made by employers to their employees. Information from online internet-based vendors should also be used for data matching purposes. And finally, to score an A, we would expect to see cross-matching with data received from other jurisdictions, that is, tax administrations in other countries. Okay, now to a B score. An automated cross-checking program should access these 4 A-level program information sources: banks and financial institutions, VAT declarations, employers, and government agencies. From the government agency sources, at least 3 government agencies must participate. Cross-checking information with information from stock exchanges, shareholder registries, social security agencies, and online vendors is not required, however, to score a B. Moving then to a C-level score, here we should expect to see the tax administration gathering information from VAT declarations, employers, and at least 2 government agencies. The other requirements don't apply for a C score. Now that we've finished with indicator P620, let's discuss how to score indicator P621. This is about the nature and scope of proactive initiatives to encourage accurate reporting. And remember, indicator P621 has only one dimension only, so the score of the dimension becomes the indicator score. A tax administration will get an A-level score if all of the following are present. A system of public and private rulings is in place. Public rulings address how specific provisions of the tax law will be interpreted and applied by the tax administration. Private rulings by the tax administration explain how the tax laws will be applied in respect to a specific set of facts or transactions after a formal request for a ruling by the taxpayer. Cooperative compliance arrangements have been adopted. These are voluntary arrangements between the tax administration and taxpayers and are aimed at real-time resolution of issues openly and transparently. Those approaches are generally conditional upon taxpayers demonstrating good governance in their tax affairs and their willingness to make full disclosure as tax risks occur. In other words, disclosure is in real time. In return, the tax administration will commit to providing enhanced services such as the speedy resolution of issues. To qualify for a B-level score, the administration should have a public binding ruling process in place, and of course there's a private binding ruling system in place too. It doesn't require cooperative compliance arrangements to get a B. To qualify for a C, you simply need a public binding ruling system in place. Let's now look at how we score P622, which is about the soundness of the methods used for the monitoring the extent of inaccurate reporting. Remember, indicator P622 has only one dimension, hence the score of the dimension becomes the indicator score. So let's look at how this dimension is scored. A tax administration will get an A-level score if it follows the international good practice mentioned in the following slide. For an A-level score, the tax administration must use a methodology that satisfies these requirements. The methodology for monitoring inaccurate reporting must cover VAT and one other core tax. The methodology must be applied at least every 2 years. The results must be independently reviewed, are subject to credibility tests, and must be made public. And the results must be used in designing tax administration interventions to improve accuracy of reporting. A B-level score requires that the methodology for monitoring inaccurate reporting covers at least VAT. The methodology must be applied at least every 4 years, and like an A-level score, results must be independently reviewed and made public. Again, in the same way as an A score, the results must be used in designing tax administration interventions to improve accuracy of reporting. For a C-level score, the methodology for monitoring inaccurate reporting covers at least VAT, and the methodology must be applied at least every 5 years. Please review Table 20 of the Field Guide for a detailed checklist of questions to ask tax authorities and for examples of documents and other evidence to guide you in the information gathering process and field interviews related to POA 6. As with other POAs, you can request some of the information from the tax authority in advance, that is, in the pre-assessment phase. Although you can research some information on the web, other evidence and information will need to be gathered during the in-country assessment phase, through interviews with tax officials and observation of practices in the workplace. Although Table 20 contains a rather full list, here are some key questions to ask. Is there an annual audit programme? If so, what taxes and what taxpayer segments does it cover? What audit types are used? For example, comprehensive, multi-year and multi-tax audits, single-issue audits, examination of VAT refund claims, in-depth investigations of suspected tax fraud, and so on. Are audit cases selected centrally or regionally? Is selection based on assessed risks? Is the effect of tax audits on across-the-board compliance levels evaluated? Does the tax administration use technology to cross-check on a large scale amounts reported in tax declarations with information obtained from third parties? Is information gathered from, for example, employers, stock exchanges, shareholder registers of listed companies, banks, other government agencies, customs, the Registrar of Companies, the Social Security Agency, online vendors, and so on? Does the tax administration issue binding tax rulings, both public and private? Has the tax administration adopted cooperative compliance arrangements, especially with large corporations, to manage the risks of inaccurate reporting? If so, what's the nature of the arrangements, and how does the tax administration monitor revenue losses resulting from inaccurate reporting? What analytical models and methodologies are used to do this? For example, are compliance gap estimates made, and for which taxes? Are the methodologies sound and standard? And how are the results used? You need to remember, of course, that the detailed checklist of questions in the TADAT field guide is not intended to be exhaustive. There will be occasions in the field where you, as a TADAT assessor, using your professional skill and judgment, will need to probe further and ask additional questions to assess a particular performance indicator. You may already realise what sources of information you need to tap into to satisfy the evidentiary requirements of TADAT. Again, the field guide helps here and provide examples of evidence. Most of these correspond to the questions we've discussed and can be found in relevant reports, annual audit programmes, documented results of tax gap studies and methodologies used, and so on. You'll also need to look at any reports that exist about the effect of audits on taxpayer compliance. Non-audit initiatives can include cooperative compliance arrangements with taxpayers, general or public rulings, and other similar publications. Some of the information about audit and third-party information matching activities will need to be gathered during field inquiries. Now that you've learned about the detailed methodology for POA 6, you should be able to conduct assessments. You have learned about the good practices in ensuring accuracy of reporting. You've learned what indicators and dimensions are used for evaluating a tax administration's performance in this area. You've learned how the indicators and dimensions are scored. And finally, you've learned what to look for in terms of evidence to support your assessment. With the completion of this module and the previous modules, you now have a good understanding of international good practices in administering the 4 key obligations of taxpayers: registration, filing, payment, and accurate reporting and declarations. It's now time to move on to the next module dealing with dispute resolution, POA 7. Thank you.